Before we jump in, let's give a shout out to our sponsor, Vara Network, a revolutionary Web3 application platform, removing many of the barriers associated with building, deploying, and operating dApps. Vara's computer science paradigms like persistent memory and actor model, along with parallel data processing, allow for deep scalability, new design patterns, and features. Vara's unique architecture makes it easy to develop on, painless to migrate to, and completely frictionless for users. Learn more at Vara.network. Welcome to the Geeks of the Valley podcast, your gateway to insightful conversations with the brightest minds shaping today's industries on a global scale. Join us as we delve into the hottest upcoming trends and explore how their work is influencing the global economy. Our podcast focuses on 4 distinct industry sectors, bringing you discussions from the forefront of venture capital and private equity, innovative minds, entrepreneurship, and policy and multilaterals. What initially began as a casual coffee chat has now evolved into a thriving global platform for visionaries, where ideas are shared and connections are made. We genuinely value your input and eagerly await your suggestions for future guests. If there's a particular individual you're eager to hear from, don't hesitate to reach out to us at geeks@geeksofthevalley.com. Tune in and join us on this exciting journey of knowledge, inspiration, and innovation.
This morning from Singapore, we have Qin En, partner at Saison Capital, a fund focused on fintech and embedded finance across emerging markets. It's part of a 30 billion assets under management financial services conglomerate with active presence across Japan, India, and Southeast Asia. Before entering the world of venture capital, he was the co-founder of Glints, Southeast Asia's largest talent platform. Along the way, he's been recognized as a Forbes 30 under 30 entrepreneur and has seen firsthand how the 0 to 1 journey can both shape company culture and market impact. In this episode, we explore how Qin En leverages his founder experience to guide investment decisions, why embedded finance is powering the next wave of disruption, and how Southeast Asia's unique market dynamics are creating unique opportunities. Whether you're a founder navigating the fintech frontier or just curious about how Web3 and embedded finance intersect in real-world businesses, join us to unpack regional wisdom and future-forward thinking. Qin En, thank you for joining us from Singapore. How are things on your end?
It's great. Thanks so much for having me.
Awesome. Let's jump into our first question here. Tell us what inspired you to be an entrepreneur and, how did you get your early career? What was the interest?
Yeah, that's a very interesting one because what often people say it's, are entrepreneurs born or are they made? And I think for me, it's definitely the latter, where I didn't expect myself to be a founder. So I was born and I grew up in Singapore all through my life, the typical sort of Asian student where both my parents were also in academia. And so really all of it was about, of course, getting good grades. And at 18 years old, in the Singapore context, what success looked like was getting a full ride government scholarship to an overseas college, which I did. So that was supposed to be my path. I had no plans, no intentions of being a founder. But as luck, or as fate would have had it, when I was serving the tail end of my military service, that was when I got together with 2 of my schoolmates. And what began as really a side project turned into a startup. And what began as a startup turned into today what is one of the largest recruitment tech companies in the region. So one might call it accidental, but really there was no way that I would have ever predicted myself going down this path.
Yeah, that's that's interesting that you sort of played to your strengths and you tried out different things, I think is the theme of this, and you have kind of a unique background. When you co-founded Glints, Southeast Asia's largest talent platform, what are some of the key lessons you learned from scaling a startup in that region? And, how have you applied it to some of the investment decisions that you're making today?
Absolutely. I think one of the biggest learning lessons I've had is how really distribution or sales is king above all. Now, when I first started the company, I think I was, of course, very familiar with all the Silicon Valley stories, literature, and all that content online that really talked about product-led growth. right? And I think at that point, Slack was just getting started, Notion was getting started, all these products that sort of went viral. And I think naturally that led me and my co-founders to really think, okay, if we build a great product, people would come and people would be willing to pay. But I think that couldn't be further from the truth. I think what we're seeing from the likes of Slack, Notion, it's really one of a million outcomes where they really sort of, I would say, in many ways hit the jackpot. Of course, it's a great team, but I think it's a combination of many things, including market and timing. But I think for the large part, what we realized, or what I learned the hard way, was that really at the end of the day, there are so many more successful businesses that are built on the basis of strong distribution. So the idea of product-led growth, to be honest, even till today as an investor, I think of it as largely a myth, where of course everyone wants it. And if you get it, that's amazing, but it's not something you can count on, whether as a founder or as an investor. But what you can count on is actually building very strong distribution channels. And that starts with learning how to do sales. So when I started that journey, and I really give credit to some of the investors that we had who were more than investors, they were coaches to us, right? One of these investors, he actually sat me and my co-founders down and made us cold call. And by the way, this was the time when I just dropped out of Stanford. So as you can imagine, 20 years old, full of ego, felt like I was living the dream, dropped out of Stanford. And hey, here I am cold calling. Like that's beneath me, right? That's what I initially thought. I can hire people to do the cold call. But I think that was really, once again, couldn't be further from the truth, because what was very important was for my co-founders and myself to really learn how to cold call, learn how to sell. And the premise is very simple. If I can't even sell the company, sell the product, sell the services as a co-founder, what expectation do I have when I hire someone to do it? I think that was the basis of it. So really sort of being forced to sit down, pick up the phone, dial, and really get through that hurdle of rejection was, I would say, one of the most valuable lessons I took away from my entire startup experience. So ever since then, I've never been afraid of reaching out to people. I think of a lot of these challenges as like a funnel problem, right? A funnel problem in the sense of once you know your conversion numbers, then anything is possible. Let's say I need to, let's say a particular investment in a particular area, or I want to help one of our portfolio companies look for investors, look for customers. At the end of the day, it's just the same mindset, right? That everything is a sales funnel. If you put in enough top of the funnel, you run them through the process, eventually you lead to some success. So really, I would say to summarize, the ability to sell, the ability to think about distribution was one of the biggest turnarounds for myself and for the company that I hold closely even to this day.
Yeah, thanks for transparently sharing your experience and your stories. I think one thing I got from what you just said is for a lot of the founders, or even if you're getting into VC, real world experience and getting your hands into these things is very important. Because I know there's also VCs, for example, some of them, maybe they've never started a company before. So I know this is always a discussion point. I want to get a little deeper into Saison Capital. For our listeners who are not familiar, could you just provide some background on its legacy? Maybe how long have you guys been operating? And briefly maybe touch how it aligns with Credit Saison's broader mission, because it's kind of part of this larger conglomerate. I think a lot of people don't know that.
Yeah, definitely. So one thing maybe I'll start is with the parent company. So Credit Saison is a large Japanese financial institution. It is actually the second largest credit card company in Japan with more than 70 years of history. For the first 60 years of its existence, it primarily existed as a domestic business in Japan across payments, real estate, entertainment, all sorts of things. But outside of Japan, it's not very well known 10 years ago. Now, 10 years ago, there was an effort to globalize, to internationalize. And that was when we started two different businesses. One, it's private credit, and the other is venture capital. So venture capital, what you're looking at, it's Saison Capital. So Saison Capital started in 19, a relatively young venture capital fund. And I think we are one of the unique corporate venture capital firms out there that is primarily has a financial mandate. Now, this might seem a bit odd to kind of say, but in the world of corporate ventures, actually the majority of corporate ventures out there exists primarily for strategic purposes to serve the parent organization. Often financial returns are secondary, and whether or not a startup can work with the parent company is a key criteria for many other firms. But for Saison Capital, we're different. It's the opposite. So we primarily exist as a venture fund to make money, to drive financial returns. And of course, there's the strategic elements, but those are good to have. And where relevant, we bring them in for the companies. I think that's very important for two reasons, right? Number one, it really allows us to move fast. Before I joined Saison, the first question I asked is, are you guys going to take 6 months to write a 100K check? Because to be honest, when I was a founder, that's the impression of Japanese funds, right? Like you just take a super long process and then maybe the outcome is not what you want. But I think they made the promise that it isn't, and they kept the promise, which is why I'm still around. So really, Saison Capital today, we are early stage venture capital fund. We invest in 3 areas: fintech, commerce, as well as Web3. We have investments primarily in emerging markets. So this is India, Southeast Asia, and most recently LATAM. And what's unique about us is beyond doing direct startup investments, usually at the seed and Series A stage, we also have a very active fund of fund mandate. So what that means is we actually actively invest in venture capital funds all over the world. We partner with these GPs of the funds to get deal flow, to get access, to get market intelligence. And today, where we stand, we have about 100 direct startup investments, and we have almost 20 fund investments. So over the past 5 years, we have built up quite a strong and established portfolio, and we're excited about what's ahead of us.
Yeah, thanks for covering that. And I know you guys have a very strong network of, either past operator VCs or even current. So I think that's really great to have real world experience, like you said. Let's dive a little bit deeper into some of your experience or how your unique ethos on investing in the region. So embedded finance is, something I think it's getting very popularized, but not very well understood. Can you explain a little bit about why this trend is getting popular in more Southeast Asia markets and what it is?
Absolutely. So maybe to explain what embedded finance is, it's really looking at companies that their primary line of business is not a fintech business. An example of this could be, think of your typical SaaS or your software companies. Perhaps they provide software to logistics players, they provide software to dental clinics, they provide software for a variety of purposes. So fundamentally, one will not look at them as a financial business. However, because of their business model, there's actually a huge opportunity for financing. Now, this could be B2B towards other businesses, or this could be B2C to other consumers. And so this is really the idea of embedded financing, which is literally you embed financial products in a non-fintech, non-financial business. Now, why I think this is interesting is for a few reasons, right? Number one, once you are able to see the world with that lens, a lot of businesses in this world, regardless of whatever industry, actually require some form of financing in one way or the other. And that presents a very exciting opportunity for someone like Credit Saison, because like I mentioned, we have 2 businesses. Venture capital is one, but the other piece is private credit. So private credit, or basically lending, is where we are really able to provide unfair support, unfair advantage, I would say, to our portfolio companies. So usually the model of how this works is, for Saison Capital, we will invest in these embedded financing companies. We provide them equity capital. Now, these startups go on to build and grow their businesses, and often in order to unlock the next stage of growth, they need some form of debt capital. Why debt capital? Is because equity capital is quite expensive, right? You have to keep on diluting shareholders, which is not ideal for everyone. The alternative is taking debt or taking loans. Now, capital is something that Credit Saison is also able to provide, especially across India, Southeast Asia, and Latin America. And these are the markets with the largest unmet needs of credit. So really what we're able to do is to provide capital in 2 different ways, debt as well as equity, to really help these companies to unlock growth. So one of the most recent examples to really make this come to life is our most recent investment in Brazil is called Capim. What they are is they started out as a dental clinic software. So really sort of the idea is they go to dental clinics, the end-to-end, everything from patient registration, diagnosis, follow-ups, all of that is the core product which they have. Now, the embedded financing product is essentially a buy now, pay later. For example, for certain complex dental treatments, the cost might be quite high. So really what they want to offer is ability for customers to pay installments. So Capim not just offers software, but also offers this financing or this buy now, pay later. Now, Capim needs capital, right, to fund this buy now, pay later, because they need to pay the dentist right away when the treatment is done, but then they will only collect back money, let's say, across a 6 or 12-month window. So this is where Credit Saison comes in also. We provide that debt capital that really helps them to offer this product. So really that's why we're excited about embedded financing, because it really helps businesses to grow and unlock new customers. And at the same time, it's how we ourselves differentiate from, I would say, the world of investors out there.
Yeah, I love that. Love that story and the explanation. And I think it makes a lot of sense because, we're increasingly seeing a lot of non-fintech companies need to either integrate fintech solutions or, I was just thinking about how the infrastructure of some of the countries that you're investing in, that also might have to do with the changing business models. Can you talk about, maybe compared to the US or even China and other regions, is there anything unique about some of the emerging markets in terms of the infrastructure that you guys, um, see a difference in terms of, like you're saying, embedded finance? It kind of requires maybe high bandwidth, low cost internet. Do you sort of look at these things, or is it a play on the culture as well?
Yeah, I think it's a combination of many things, but I think we often get this question of why emerging markets, where, of
Mm.
course, it's a lot more challenging. And to be honest, the risk is higher. Once again, if you look at some of our other peers, many of them have US, have Europe offices, which, of course, makes a lot of logical sense. But I think for us, we have really defined our DNA around emerging markets. And it's really for a few reasons. I think firstly, we see the true gap and opportunity in emerging markets, right? It's not to say that developed markets like US and Europe are perfectly served, but generally there's plenty of options available, especially for, let's say, individuals or micro businesses. But what we see in places like India, like Southeast Asia, like Brazil and Mexico, it's really a large and growing gap. Right, a gap of needs that needs to be served that even the domestic players are unable to serve. So what that means is really two things. One, it's good for business because that really means that it's a lot less cutthroat. It's a lot less of a race to the bottom. It's really about, there's so much of the market that remains to be served. So it's great for business. But I think more than just business, our organization also has a very strong impact lens, right? So we really think about what's the kind of impact that we are creating. And when I say impact, I know that it elicits a lot of reactions, but for us, we really walk the talk. For example, after we invest in companies, often we have technical assistance programs to really help them to, let's say, follow the UN SDG goals, where we provide financial grants, we provide human expertise to really help them to meet those goals. So the way we think about it is, look, in these emerging markets, there's just so much rich opportunities, not just to make money, but also to do good. And I think that's why it has been a very intentional strategy.
I think that's well said. And, I think it's also interesting you guys have such a strong ethos about supporting the ecosystem and like you said, you're standing up for values. I honestly think in maybe the venture capital community, not every fund or operator exactly has a belief system. I think that is actually very important, even when to say no and,
Yeah.
when to focus on specific things. What advice can you give to other VCs or other founders operating within the Southeast Asia startup ecosystem? Are there any unique complexity of the regulatory environment of places like Southeast Asia that you think are positive or negative, or do you just think it's neutral?
Yeah. Look, I think Southeast Asia, as everyone knows, has been a very complex and a challenging environment, right? I think definitely there has been a lot of negative press surrounding the recent events and all. And also, of course, venture startups has been particularly sort of challenged in recent years. Look, I think the way we think about it, it's important to have a long-term view of the region. And that's something, once again, we are fortunate to have, given the strong corporate backing that we have, right? But I think fundamentally it's important that businesses are valued properly. I think that's the fundamental issue. It's not that there's no good opportunity here. It's not that there is no opportunity to make money. I think fundamentally it's just a situation where we have applied tech multiples that were, let's say, perhaps more relevant to the US or Europe markets, and we have applied those same multiples or even higher multiples, even more inflated multiples to Southeast Asia companies. And I think as a result, that has just created this spiral of bad behavior where there's this pressure to grow at all costs. And then when that growth doesn't happen, certain founders might choose to opt for the shortcuts, right? And that's when we see potential integrity issues come out. and all. So I think that the root of all of this, and plus also even without those integrity issues, we have seen also very disappointing financial performance overall through the region. So I think that's a solution to this problem. It's not an easy solution, but I think it's a simple solution, and the solution really is businesses need to be valued for what they truly are, and it needs to have a reality check. I think that's one. And I think that's also easier said than done, because really at the end of the day, this means all investors need to play a role in terms of properly valuing these businesses, right? As fund investors, as investors into other venture capital funds, we have also seen quite a lot of funds that just raise enormous amounts of capital, where even if you do a back of the envelope napkin math, it just seems impossible to even return 1x of the fund, right? And we think this is harmful for the ecosystem, because what this really means is that many investors are going to lose money. When they lose money, they lose faith in the region. And then this once again creates lack of confidence in Southeast Asia. So really, I think what this means is discipline is required on all fronts. Discipline is required on founders to be realistic about how much capital they should raise at what valuation. Discipline also on investors for them to not raise excessive amounts of capital and end up the only way to deploy it is by giving higher valuations. So I see all of this as really like a coordinated collective effort that we all have to embark on. The good news is that because of the current environment, the challenges, we are all forced to do that. But I think it's important that hopefully we don't forget these mistakes when things improve.
Yeah, you're definitely right. The markets keep adjusting, but I think it's a great point that we need realistic valuations. And that sort of leads into our next point, kind of talking about the importance of liquidity. So one, liquidity for, like you're saying, sometimes the insane startup valuations, sometimes it can be positive too. Maybe you're raising funding rounds, but the problem is if there's not enough liquidity in these markets, you don't really have investors exiting. And I think that's definitely a trend people are talking about. There are more unicorns, for sure, in these emerging markets, but we also want to make sure we also want to make sure there's enough liquidity to exit the markets.
Yes.
Can you give us some perspective on, I guess, what are some of the strategies that either you or other funds are taking to ensure that liquidity is there? We don't have to get ahead of ourselves into the next topic, but there are sometimes some techniques for Web3 companies, unique ways to generate some liquidity too. So I'll just start off with your general thoughts and we could go from
Yeah. No, I fully agree with what you say. And I think really it comes down to as long as a business is properly priced, we have even seen, despite this challenging market, several situations of liquidity that has happened for not just us, but early stage investors, right? This could, of course, be M&A activity, or more often than not, it's secondary exits, right? So look, I think really it comes down to once things are properly and fairly priced, I think that makes it a lot more attractive and that opens up the world for liquidity. I think that's one. Secondly, I think there's also a flight towards simplicity in business models in recent years. So anything that becomes too complex, and to be honest, embedded financing is one of them, it seems to be less inclined, less favorable to investors. That's the trend that we have noticed. Instead, what we have seen a flight towards, it's really, I would say, more consumer-facing businesses, the likes of course, your coffee chain businesses, or things that are just easily measured and easily to due diligence, right? Here's to give you a sense of the difference in complexity. Let's say today I invest in a D2C, direct-to-consumer brand, right? That let's say sells shavers, for example. This is just makeup. If I want to check the sales, super simple, right? I just ask the founder, screenshot your Stripe dashboard, show me your payments, and I just tally it against their bank accounts. Done, right? That's pretty much the due diligence I need to at least verify the veracity of these statements. Now, in a lending business, that gets a lot more complex, right? First, I need to due diligence the company, and then I need to due diligence who they're lending to. I need to diligence how they are recording the books. So it just becomes a lot more complex as a business model, complex for investment diligence. And I think that definitely impacts the potential liquidity. So I think really the advice, the piece of advice there, it's not just to say like, oh, don't do complex businesses, right? But I think really the advice there is to really make it simple for potential investors to really understand, to due diligence the business. And this is applicable not just for founders, but even for early stage investors, right? It is on us to work collaboratively to ensure that that is achieved.
And I'm just curious, since you guys also operate on the credit front, because of today's instantaneous nature of a lot of these fintech solutions, or, if we're even using a Web3 solution, Is there anything different in terms of the types of loans or the collateral that you put up, even for businesses? Are there different real-time metrics they can leverage to, I don't know, improve their credit worthiness compared to before? Because just in my perspective, I think before finance and even venture investing or raising funds, it was sometimes very slow. Like you said, in some markets, it
Yeah.
takes months, right? I'm just wondering, maybe good or bad, the instantaneous nature of things, how does that affect credit and startups, what they have access to? Because yeah, things are just going by the second. These users in some of the regions that you're investing in, they go into the hundreds and millions, if not billions. It's a lot of microtransactions for sure.
Yeah. Look, I think that's definitely the direction that we all hope that we're going towards, but we recognize that this is going to be a very slow change. For example, in places where infrastructure is already there, like India, with things like KYC available, with things like UPI, I think that really transforms what you mentioned, right? We're able to due diligence things. I wouldn't say real time, but a lot quicker, a lot faster, and it really shortcuts a lot of the other processes. However, in places where the infrastructure is not so mature, where there is skepticism even around the integrity of that data, then that becomes a larger challenge, right? And I think that's where really regulation, the governments play a very important role in really creating that conduciveness. The particular case study of a country that has done this very well is actually Brazil. Which is why we have been quite excited about it. And in fact, one of my team members on the venture capital side, he has moved over to be based in Sao Paulo full time, right? We have seen the Brazil central bank to be very strong. And yes, of course, Brazil people know its challenges, right? There's political turbulence, there's macroeconomic challenges, but the central bank's strength in launching strong financial infrastructure in terms of deregulating to allow for innovation to happen has been extremely commendable. I think by now most people know about Nubank. It's the de facto arguably one of the most successful fintech companies, which at its peak on the Nasdaq was $85 billion. I think today it's somewhere closer to 60 billion. So by a large account, a highly, highly successful company. The reason why Nubank was able to exist was really back then the regulator that created licensing that was open and favorable for innovation. And you compare that to the country that we all reference to for innovation, US. Today, to get a banking trust charter in the US is extremely painful, extremely difficult. And for that reason, we haven't really seen a successful digital bank come out, at least from a startup point of view, right? All the digital banking we're seeing is driven from the likes of Goldman Sachs, JP Morgan, Apple, all these large corporations that can get the banking charter. But really for Brazil, Nubank existed from no one, right? Like not from any of these existing institutions, purely because of the regulation opening up. So I think that's a long-winded way of saying that, look, I think there's going to be a lot of progress. Many countries are at different points of this journey. So really for investors and for founders, it's important to pick the right countries to invest in, right? Because there are some things that are just fundamentally difficult. If there's no eKYC, there's no national ID database, there's no real-time payments, then naturally a lot of things are just going to move a lot slower.
I think that this is definitely well said. Depending on the your moat or your differentiation, what you can do well, you should be wise to pick the region, and you should have some kind of competitive edge or knowledge about the region.
Yes.
As we're, I think the last topic to kind of hit and everything. This is a topic that people are very excited about. Is basically the future of Web3 and crypto. I think worldwide there's been a lot of macroeconomic change. For example, you have countries buying Bitcoin. In the U.S., maybe you have ease of regulation. You guys have been investing in Web3 for a while, both infrastructure plays and maybe consumer as well. Where do you see the industry heading in the next maybe 2 to 3 years? I'll give a shorter time horizon because I think things are actually moving faster due to ease of regulation globally.
Yeah. No, I think we are definitely very positive in terms of the role of blockchain in changing financial systems. To be clear, we think this is going to be a 5 to 10 year journey at least, right? So we're not expecting this to be an overnight thing, but I think there have just been so many positive tailwinds. I just came back from New York last week at the Digital Asset Summit where President Trump spoke. Even though it's virtual, but this is the first time a sitting president has addressed a crypto or digital asset conference, right? And I think that definitely is a huge positive sign. But more importantly, since 3 years ago when we launched our digital asset fund, the reason why we did it is because we were already tracking all the activity that is happening, but perhaps it's not public, right? And a lot of this is driven by large, reputable institutions that are household names. We think that this is truly going to be a transformative technology because fundamentally it helps money to move at the speed of internet. If you think about how money moves today, it's by and large insane that firstly it costs so much. And not only it costs so much, it's so inefficient. You need to wait 3 to 5 days for your domestic wire to clear in some countries, and cross-border it's even longer. So clearly money today, it's not built on infrastructure for the current age we live in. It was built 50 years ago. That predates the internet. So really we see blockchain as the new rails for money movement to happen. But as one might imagine, if you want to change the entire rail network of a country or the world, it takes a lot of time. Clearly, a lot of people are going to get uncomfortable. A lot of people are going to be unhappy. A lot of people are going to say it's not possible. It's a foolish endeavor. But I think we believe that this is going to be truly different. This is going to be a new railroad that many financial institutions are already doing something about. And therefore, I think overall, we think now is the time as early stage investors to capture the opportunity.
100%. And do you think, from from your lens, will it be the companies that have a unified system like India and China for basically, they have all their consumers, banking, you have all these different applications, they kind of have a unified systems. Will it be these countries where blockchain and crypto will thrive in the coming years, or do you still have the perspective? And I don't know if you have any specific stories on, do you think a specific region is actually using crypto consumer apps more than they were in the past few years?
Yeah, I think if you look at the data, and that tells, that's very telling. In fact, the markets that we currently invest in, Southeast Asia and Latin America and India, are some of the fastest growing and widest adoption. I think if you look at the top 10 countries of crypto adoption by percentage, it is actually mostly in these regions. And so I think that the groundwork is already set. The ground is already fertile for many of this to happen. But I think also what's important, once again, is back to how governments drive it. So I think very positively, you see Singapore, you see Hong Kong, you see Dubai, and even emerging markets like Brazil that are creating the right parameters for even larger mass adoption. I think a lot of this is because many times what we really need is for governments to create the safeguards, create the safety boundaries before we see the next wave of mass adoption and waves of people coming on board. So I think that's already happening right now as we speak. And it's the kind of thing that it wouldn't be obvious until it's too late, right? It's not the kind of thing that today there'll be a headline that says, oh, 1 billion people just came on the blockchain today. No, it doesn't happen like that, right? It's a very gradual thing that just happens. And by the time people realize it, or maybe they don't even realize it, it's sort of like it's already there. So the best analogy I love to give is today we use a whole bunch of apps, right? On our phone, on our laptop. Do we ever ask about, is it Google? Is it on Google Cloud? Is it on Amazon Web Services? Or is it local on-prem at the data centers? And we don't, right? All we care about is having a great experience and enjoying whatever benefits. So we really see this is the future of blockchain, right? Where people are going to learn, are just going to assume it works. People are going to enjoy the benefits of digital asset ownership, going to enjoy the benefits of instant money movement without worrying about how it's done.
Yeah, it's quite exciting to see maybe CBDCs, rise of stable coins. I think there already are some applications out there that under the hood, they're using stable coins and such, but not everyone is even aware, even the countries that accept crypto. So I think that's a great perspective. Thank you for sharing that. To end this podcast off, enjoyed all of your insights, and we covered different regional modes, very exciting stuff. So to end the podcast off, we're going to end with your advice to startup founders or builders. Specifically, I guess it can either be in regions that you're investing in or kind of where you are right now, which is Singapore. So yeah, what are 2-3 pieces of advice you'd give for founders either building in those regions?
Yeah. I think number one, as I said at the start of the podcast, focus on distribution, right? Most problems can be solved with sales. That's what I always truly believe. So I think really for founders, the important thing is to figure out what does distribution look like. Product is important, but don't obsess too long over it. So that's one. The second piece, it's going back also to the challenge of this region. Most things can be solved when things are properly priced and valued. People always talk about risks. It is true. In any endeavor, any startup, any region, there is going to be risk. But I think it needs to be properly priced. And once things are properly priced, it's a lot easier to raise capital. It's a lot easier to find the exit. So that's going to be an important piece. And I think the third thing, it's to remain open-minded. One of the challenges of working in blockchain and sort of being an advocate for it is I get a lot of pushback from people who say, "Oh, blockchain is a scam. Bitcoin, it's there's no fundamental basis." I mean, all of those have a grain of truth to it, right? I'm not denying it, but look, I think it's important to really think about what's ahead. The final sort of anecdote I'll share in relation to that point of being open, it's think about it. 15, 20 years ago, when Facebook just launched, people thought that it was a place for teenagers to post drunk, embarrassing photos of themselves. Some people always thought of social media, it's for the young people, businesses would never go on it, it's not a serious business. Today, you don't go and ask a business, do you have a Facebook or LinkedIn page or Instagram page? It's a given, right? And literally every business is there. So once again, the way I see how social media worked, it's the same as the blockchain revolution, right? People see this as this is a for fun thing. This will never reach mass adoption. Just keep in mind that we said the same thing about social media 15, 20 years ago, right? And today, all of us are all across social media. It's $1 trillion industry. So yeah, I think to remain open would be the last piece of advice I have. Thank you.